All right, everybody. So welcome to the watch list of Sunday, August 4th. Man, this watch list, I really feel like is gonna be really important, like very important. We have been in a crazy bull market for some time now. And I'm not saying we're not still in a bull market, but there's a lot of things like even outside of trading, just as an investor, a lot of people are pointing to the fact that we might be starting our next bear market, as crazy as that sounds, or maybe just a correction, but something's up. Some stuff is brewing. I'm gonna show y'all a couple things that's showing us that like there are some things we worried about. I'm gonna talk about all of that. Um, but before I kind of get into what to expect next, we always try to take certain gems from the previous week. And I know last week we didn't have a watch list because I was on vacation. So I kind of have a few things I'm going to talk about, but I'm gonna just take it to the most recent. Like, let's talk about Thursday real quick, which is the day that the market really sold off. It was not like necessarily a historic sell-off, but more so that it made headlines. Like, we had some crazy numbers in that sell-off, and so let's talk about it. So boom, last week, actually for weeks now, we were targeting price coming into this weekly order block. Now that's a bullish order block. And I always tell people that when it comes to order blocks, if you're looking at a bullish order block, you want to make sure that you're in bullish price action. That's when they're going to work out. Now, of course, you have to know how to identify what a good OB is, right? You got to actually know what a good OB looks like. And I will have a master class for that in a few weeks from now. I'm looking forward to that because my order blocks class is life changing. I'm gonna say that right now. You know what I mean? So I'm really, really good at picking good order blocks. And so basically, this is a very important OB. I would validate this as an OB. I was looking for price to come to the lower half of this OB before popping to the upside. Now, you may say, like, why the lower half? There's a reason for that, but I won't even get into that right now. Just the point is, this weekly OB was very important. Now, it's very important if price is bullish. Like that's a little asterisk you gotta have on that sentence. Like, it's very important if price is deep bullish. So if price does not use that order block, it's always an if then statement. If we don't use this order block, then we're probably not bullish. And so seeing price trade under this order block, right, is like interesting to look at. Now, there's a fair value gap here in discount, and by discount I mean that if you were to draw a a dealing range, meaning going from the low of this move to the high of this move, you can say, hey, this fair value gap exists in the lower 50% of it, and so therefore there's some chance that we could bounce from here. There's a chance. I think that the probabilities are lower, and I'm gonna kind of give you guys my reasons for saying that, but at least just for right now, it's already very suspect as to us not bouncing on this OB. But that's what just happened. At the time, we didn't know that would happen because this is what the market looked like at first heading into Thursday. And FOMC was on Wednesday. So Jerome Powell just said a whole lot. He talked about potentially cutting rates in September. Everybody's kind of anticipating that right now. And then simultaneously, of course, while he's before he speaks and while he speaks, you see the market rallying out of the same order block we were targeting. And what we liked about this rally was it's a weekly OB, and then the 4-hour chart was creating bullish fair value gaps to the upside. And I'm talking about fair value gaps that were not even being revisited. That's a really strong signal. When you making fair value gaps that's not even getting revisited and price just keep pushing, that shows a lot of strength. And so you would expect just, continued movement to the upside. Now, this fair value gap right here on the bearish side, I had told the community, I said, this fair value gap is very important. I think that we're going to push past it based on the fact that the weekly was showing bullish fair value gaps on the 4-hour coming out of a weekly bullish order block. So that's really good. Those are really good signs. We can see some real upside. But if I was a bear, right, my point of interest as a bear would have been this fair value gap. I'll be watching this area to see if we can reject this. And so let's see what happens. So now, as a bull, let's go back to our bullish lens. Put your bullish glasses on real quick. You really want to see this fair value gap work out, because if you're using the nearest PD arrays to you, meaning the nearest fair value gaps, the nearest what we call continuation order blocks, when you see prices barely retracing, keep going, barely retrace, keep going, that is showing a lot of strength in the price leg. So the first retracement we had is this red candle. This is literally the first time price reversed ever since this run on lows and then pop up with fair value gaps, right? We ran these lows out, popped up with fair value gaps. That's really good. The very first, once again, retracement was this red candle. So this is our first test. Like, all right, let's see what we're working with. Like, are we working with, those really strong price legs where we call it spooling, like it's price, what we call spooling, or are we gonna have a deeper retracement? Because if we have a deeper retracement, the last place we could bounce from is this fair value gap. So it's like if we use this one and keep going, price is going to all-time highs. It's no question to me. If we use this, it kept going all-time highs, no lie. But if we come down here, it's like, hey, it could go either way. So we just gonna have to see. So let's talk about that scenario. So boom. Wednesday finishes, it's now Thursday. You see price coming to this area, and then let's see what happens. So it's a 4-hour fair value gap. And we talked about the time frame to confirm the 4-hour with is the 15-minute. What that means is if you come into like a 4-hour PD array, such as a fair value gap or order block, you want to look at the 15-minute chart to see if the 15-minute chart is going to give you a reaction that includes fair value gaps in the direction that you desire. And so if you're bullish, you're looking to see if you'll make a bullish fair value gap like the one that we just made right here. So boom. This is the first thing that you want to see, like, oh, it's lit, we made it. Because look, when we first tapped into it, and then we came out of it without any 15-minute bullish fair value gaps, you have no confirmation that price wants to actually use that 4-hour. I meant to put Bissy here. I put Sibby twice. Why ain't y'all tell me? Come on, man. Why ain't y'all tell me? This is supposed to be a Bissy, guys. If that was confusing you, I apologize. Dang, I almost want to start class over just for that, but I can't. I don't like making mistakes. So look, this is supposed to say Bissy, both of them. All right. Now, if that was confusing you, apologies. Nobody gonna tell me like y'all fake. Anyways, so boom. We come into this Bissy and we what you call it? Right, we're not making 15-minute Bissies out of it. We're not making 15-minute bullish fair value gaps out of it. And then price, staggers back down. Either way, it's not ready. And if you look at the time, you can see why. Look at this. This is 4:30. All of this 6 o'clock a.m., 7 a.m. And so there's a concept called time and price. We trade time and price. It's not just price. You want to make sure time is in alignment with it for the move to really occur. So it's not really surprising to me to see that we were chopping in here during those type of hours where you're not really expecting really aggressive movements, but you do expect aggressive movements when at 9:30. Look at the time the fair value gap formed, 9:30. This fair value gap is literally the 9:30 candle. All right, so we highlight this. We highlighted this, and what you're gonna do now is, if you want, you could take the risky entry and kind of get in with a stop loss based on this fair value gap. Now, that's not how I would typically enter. I'm gonna watch price, especially if after we leave that fair value gap, right? We're not making 1-minute fair value gap. So I'm kind of like, let me wait for some confirmation, right? And so what you could do in this scenario is you want to see this area, the 15-minute area. Guess what you could do? You could scale down again. You can scale down again and say, all right, if we're going to use that 15-minute fair value gap, that means the 1-minute chart has to respect it. Meaning when the 1 minute taps into the 15-minute, the 1 minute will make fair value gap. All right, I know I'm saying a lot. So let me slow down for 1 second. I'm gonna say this, right? Notice we had a 4-hour fair value gap, and we wanted the 15-minute to make Bissies. Let's just do the same thing again. We're just scaling down. It's a different set of time frame. This time we have a 15-minute fair value gap. So if price is gonna use it, chances are the 1 minute is gonna make its own fair value gaps after touching it. All right, so let's see how that worked out. And I'm gonna go ahead and erase this blue area just so it's not cluttered on my chart. But remember, we're technically reacting to the 4-hour, okay? Technically reacting to the 4 hours for value gap. And then this is the 15-minute one. This is I'm gonna highlight it so y'all know what's up. That's the 15 and this, so you guys know what we're looking at. So in order to tell that we're gonna use this, you want to see the 1 minute come into it and then make 1 minute Bissies. Then you could get involved because the 1 minute is a nice little entry time frame. You could have a stop loss that's not too many points because your stop loss is based on a 1 minute fair value gap. So let's just say hypothetically real quick, because it didn't happen. So hypothetically speaking, if we would have made a 1 minute fair value gap right there, and you wanted to enter inside of that fair value gap, right? The fair value gap might be this wide because it's a 1 minute chart. And so your stop loss on NASDAQ is this small. But let's remember that this is supposed to be the start of a 4-hour move. So do you see how, like, you guys may have seen me catch a lot of huge plays at this point? Do you see how I could catch really major plays because my stop losses are this small, but my targets are based on the 15, the 4 hour, the hourly. And so like riding an uptrend from here to like 4 hour highs is a whole lot of points. And that's why it's like, even if I take a loss, my losses are based on, I didn't even go down that low, but like technically 50, I really get in on the 15-second mainly. My losses will be based on 15-second POIs, and but my wins is because when they get to their target, they're based on hourly targets, 4 hour, sometimes a daily target. And so you really catch some major moves. Whether even as a swing trader, I'm still entering with the same process. But anywho, I'm just saying, if we would have made 1 minute, so you could get on the 1 minute right there. Stop loss based on this same 1 minute fair value gap is what your stop loss is based on. And then you could ride it to the 15-minute highs, you can ride it to the 4 hour highs. That's all up to you. So that's what could have happened if it actually worked out. But in this case right here, if you let it play out, you'll see that the 1 minute never made a BTSMC. Therefore, you had no reason to go long in this 15-minute BTSMC. Understand what I'm saying? And so, like, I know that you guys can label out fair value gaps. And if you were to join a mentorship, I would elaborate on why you expect certain ones to work versus other ones not. But at least take this, right? At least take what I'm telling you here right now, right? If you are looking at a fair value gap or an order block that you're not sure if it's going to work or not, why don't you just wait for the confirmation time frame to tell you? Because if this 15-minute BTSMC was going to work, most likely we would make 1 minute BTSMCs. And so when you look at the 1 minute and you see that the 1 minute never made BTSMC, there's no reason for you to enter a play. So you just saved yourself a loss. Most people just kind of say, oh, BTSMC, as soon as it touches it, I'm in, and your stop loss is down here. It's like, you got to take a loss for no reason. You didn't even have a reason to really go long, and you take a loss for no reason. So if you want to just play it safer, let price confirm for you, because once again, even if you don't catch the bottom tick, and let's say you were to get in even right here, I don't care. This is what, 610, 19,610. If your target is the 15-minute highs, your target is 19,682. That's 72 points on the NASDAQ. Yeah, realize that? That's 72 points on the NASDAQ. If you use the minis and you have one contract, that's $20 per point. So do 72 times 20. You're gonna make that much money just waiting for confirmation. You feel what I'm saying? And so you don't have to catch the bottom tick. You still have a lot of a move to catch, because your target is based on the 15-minute, the hourly. All right, so that's the logic there. And if y'all follow me, y'all follow me. And if y'all don't, just rewind it, because I can't spend too long here because I got more to get to. But that's a little bit about entries and just how to like kind of save yourself from, they entering on PD arrays that's not actually working. But if you pay attention, you'll notice that the 1 minute comes into a continuation OB. 1 minute is holding the SIBI, and at this point, the rest was history. We've seen what Thursday looked like, and if you didn't, you about to right now. I'll go to the 5 minute just so y'all can see how it really worked out. Actually, my fault. Remember I told you, I'm sorry. If we don't use this initial one, this is the last line of defense. If this didn't work, y'all notice in the chat, I said, if we don't use this, we're going to the lows. I put this in the community. If we don't use this fair value gap, we are 100% going to these lows, because these fair value gaps in here in discount, I would never trust these. And I know people will teach you about, premium discount, and you think you want to use this, but everything's about context. And that's why I always try to make sure, like, y'all know, like, we don't say things in hindsight here. Like, we say this before it happened. I always try to put my analysis out before things happen, so y'all can see that I'm not the type of teacher that just say stuff in hindsight, because I already know, like, if it's not this, it's the lows. Both of these fair value gaps right here, both of them are irrelevant in context. All right. Once again, one day I'll elaborate why. Right now, I kind of have to move on. But either way, after this, we're going to the lows. So basically, if the only other thing that could tell you if we're bullish is this 4-hour BTSMC right here, then what time frame do we pair with the 4-hour again? The 15-minute, right? Okay. At least last time, the 15-minute gave us a little BTSMC where we had to run a test on. We had to run a 1-minute test on that one. This time, will we even get a 15-minit BTSMC? And these are shorts I took, by the way. I took these shorts down here. I took profits, and then I waited. I took profits, and then I waited right here. Did I get any confirmation that we want to use this BTSMC? Nope. After that, bro, I hopped right back in puts, and then I took it all the way to the end of the day. all the way to the end of the day, because after that it was over with. Like you seen what Thursday looked like. It was a big drop in the market. Like, and so that's all she wrote. And then Friday was a continuation to the downside. All right, so if you get no confirmation, there's no reason to take the play. And I wrote SMT up here, and I'll briefly explain that. So SMT is like a smart money technique, which is just basically talking about you're looking at divergence. You're looking at what ES is doing and what Nasdaq is doing, and noticing differences. So I'm gonna show you the SMT right here. So notice that on, I think I can show you from the hourly for real. So peep this. This is Nasdaq, and then I'm gonna have to put them next to each other right quick, so y'all can see what I'm talking about. And this is something else that could have told you to go short. So this is why I always recommend that people trade these things side by side, because this could have told you to go short right here. So peep game. I know it's kind of messy because there's some things I didn't get to go to ES about. Like ES rejected the VI and rejected the 4H bearish OB. Those are the things that allowed ES to go short. I'm not even gonna bring these things up just because of time purposes. There's so much I want to speak about, but I gotta keep in mind the time, y'all. So for right now, just know what started that move was the SMT. Do you notice that Nasdaq on that opening candle, it did not make a higher high? But on the opening candle for ES, it did make a higher high, and it was a sweep. And so you want to watch stuff like that, especially when you're at a bearish POI, such as the 4H bearish OB. There was also a volume balance up there, but regardless, you want to watch those. You want to watch that divergence. So that SMT showed you that something's about to happen, right? Especially when you're in a bearish POI like that. All right, so that's something else to look out for. You want to watch these things side by side and notice when one is going and another one's not. And then you can also check DXY for some confluence. But I got some things to talk to you about on DXY. So, I'm gonna kind of leave last week now and kind of talk about what I expect coming into this week. So I'll get back to these charts first. Let's go to the weather report. So every week we check the economic calendar, because this is where you can check the weather. This is where you can check to see like what's the best days to trade. And right now there's no major news events this week. I would say PMI and ISM are two events that you do actually want to keep your eye on, and I'm gonna tell you why in a second. But other than that, it's nothing really too crazy here to look at. But I can still see the market making big moves this week as a follow through from the previous week. So keep your eyes peeled for that. Even though there's no news events, I still feel like we're gonna move this week, just because it's like the beginning of something major. But we'll see. All right. So why is PMI and ISM relevant right now, and anything similar? The thing that the market is worried about is not that link. Let's see. Actually, I'll explain it verbally. The thing the market is worried about right now is a recession, guys. Like that's if you're wondering like why are we selling off so hard? Why is there news about Warren Buffett? Like, where's at? I had it up. I think it's this one. Yeah, look, the Warren Buffett just called a top in the market. Like I had sent this to my group chat and all that. So, basically, if you read this, you'll see that Warren Buffett and Berkshire Hathaway, they are super cash right now. They sold off. First of all, they're sitting on a record $277 billion of cash. All right. They own 4% of all T-bills issued to the public. Like, they're super cash right now, y'all. So you got Warren Buffett selling everything. He sold a lot of his Apple, all of that. You got news reports like that going on. And then you also have, my bad, I'm trying to, thing is in a way. I'm gonna talk about this Psalms rule thing in a second, so let me put that to the side. But right now, everybody's worried about a recession, y'all. So you may think like, yo, but the Fed is cutting rates in September, so that should be bullish, right? We were all waiting on rate cuts. Think what you just said. We're all waiting on rate cuts. Don't you think that got priced in already? They already know the market is supposed to be cutting, like he's gonna be cutting rates this year. But what you have to know is historically, not every time the Fed cuts rates is a bullish signal for the market. Actually, there's been some super aggressive sell-offs based on the Fed cutting rates. And why is that? That sounds backwards to you, but you need to think of it like this. The Fed typically cuts rates when something is wrong. And so we've already had elevated rates for quite some time. And people are like, yo, Jerome, when you gonna cut? When you gonna cut? When you gonna cut? So the fact that he's finally cutting tells you that he probably is about to cut because something's happening. And then mind you, there's some other recessionary signals that's been going off that show that, yeah, we might be entering a recession. And I'm gonna quickly talk about those things. Y'all know I'm super chart based, but if you want some confluence behind your trades, or like behind why we may look at the market how we're about to look at it today, I'm just giving you the background knowledge on why. And so something else to look at is this. So the SOM rule is a recession indicator, right? It just went off, and the SOM rule signals a downturn once the unemployment rate reaches 0.5 percentage points above its previous 12-month low. Now, I know that's a lot to kind of conceptualize, but it has to do with unemployment rate changes, all right? That's all it has to do with. And over the last 65 years, there is not one time where it was a full signal. So we just got the SOM signal just now. And once again, it has always 100% of the time preceded a recession. So that just went off. That's for one. And then I was talking to y'all about like what has happened in previous like rate cut time periods. And so if you kind of see here, we've had major declines after rate cuts sometimes. Like we've had a negative 27% decline, -2, -22, -1, -8, -0.5, -42, -55, -24. These are the recent ones, right? The last 3 times that the Fed cut rates at this on this chart says -42, -55, -24. And so we could have some huge sell-offs based on rate cuts. Like, don't think that's just super bullish news. No. And oftentimes Jerome Powell tends to wait until the last minute to make a move, and the market knows that. He's always late to the party. Like Spader says in the chat, he waited too long to cut. All right. And what Spader's saying in the chat is absolutely correct. So shout out to you for that comment. It's like, and also he's not trustworthy. So if he says, oh, I'm thinking about maybe doing 25 basis points, I'm gonna cut 25. The market knows there's a chance he could cut 75. Remember, he told us, yo guys, I'm not gonna cut 75 basis points. That's too much. And then he did 4 of those in a row in 2022. He did 4 75 basis point rate hikes in a row. So nobody trusts his words, and he's always late to the party. And so the fact that he's cutting rates makes the market think, oh nah, what's going on? And then we had manufacturing data come out. Manufacturing data showed that there's some economic slowdown going on. That's actually what was a big boost to Thursday's sell-off, was the manufacturing data that came out. And one other thing I want to say is the initial jobless claims number was elevated. So that shows that more people are like jobless, and it's harder to get a job right now. It's harder to get a job right now more than it has been in years. And so it's getting spooky. The only thing that's been keeping this market up and this economy up is the fact that people had jobs. So everybody's been waiting for years now for the job numbers to turn over. And now that it seems that the job numbers are turning over to people being unemployed and harder to get a job, it's like, yeah, that's going to be super recessionary, because we already have the highest credit debt that we've ever had in history. Like, credit debt is at all-time highs. So the only reason why it hasn't blown up is because we've had a job. So since we have a job, we're not delinquent on our payments. But once people lose jobs, they will become delinquent on their payments, and that will cause a domino effect, and it will snowball to the downside. Understand? And so there's so much risk in the air right now, and it's like the market's been waiting on a recessionary signal, and it looks like it's happening. And then you see all these people selling shares, et cetera, et cetera. So yeah. Brian said transitory, right? Exactly. So that's like the economic background. It's getting spooky. Now let's go back to the charts real quick, because that's really what it's about for me at the end of the day. Y'all should know that, because it's always in the charts first. So back to the charts with it. We here, but at least you guys kind of understand like why all of it, like for example, the manufacturing data that came out, right? All of a sudden that was a really important news event. We never put value to the manufacturing data, like come on. But now that there's recessionary fears in the air, you have to watch things like retail sales, and you have to watch things that are anything that can give a signal that we're entering a recession or that there's economic slowdown. All of a sudden, those news events have relevance. So just be on the lookout for them things, okay? So I'm not starting with NASDAQ. I'm gonna move down. Let's go to the dollar real quick. Let's go to DXY. So something else I want to say about DXY was, oh my gosh, where's my DXY? I'm sorry. There we go. Something else I want to say about DXY is like, You know how we talked about largely how DXY is usually somewhat inversely related to the Nasdaq, but then here you go and you see we've been super bearish on DXY as the Nasdaq has been super bearish, and you're like, why are they moving in the same direction? Let me explain. So the reason why they move in the same direction right now is it depends what type of recessionary fears are in the air. So if we're fearing a global recession, then the dollar becomes a safe haven, because it's like if everybody economy doing trash, we low key cool with investing in the US dollar because it's probably gonna do the least trash. But when it's just a US led recession, like the one that could potentially occur right now, when it's just strictly US led, the dollar tends to sell off. So there's been a lot of there's been bear markets or corrections where the dollar is also going down, because if it's strictly about the US for real, then the dollar doesn't do so well. And so that's why the dollar is moving in the same direction as NASDAQ right now. But what I'm focused on largely is the fact that the dollar is moving. So peep this. This is in the end of March. Do you realize we've been in a range on the dollar since March? Like we've been on a range. So I love to see us finally leave the range. And that tells me that the market is ready to move. That's a big deal. And that's why you see the market doing stuff it hasn't done in a while. Like it's invalidating some weekly PD arrays. Like it hasn't done that in quite some time. And so it's like the market is ready to make a move, in my opinion, and we're gonna have to see. But so the weekly SIBI right here, that's what we just rejected. You want to pay attention to what PD arrays are working. So if you have a weekly bearish fair value gap and price rejects it, and it's now making potentially another weekly fair value gap to the downside, like if we have a red candle here, that's really bearish sentiment, because you're not just using a fair value gap, but you're using it and making another one after it. That tells you like, oh, really bearish sentiment. And then you start looking for the downside targets, such as this weekly sell side liquidity right here, or you have a weekly fair value gap that I would target. That doesn't mean that I expect bounces. Please understand the difference. Just because I'm targeted doesn't mean I expect bounces. We could keep going under it. I wouldn't put value to a fair value gap right here for bullishness. I just know that price tends to seek them. And so I think price could trade into that. That's my next. I think price is going to make a move down here into down there. All right. I think the DXY is going to, my first thing is DXY is bearish to me. So once again, just as a reminder, that doesn't mean Nasdaq's bullish, because in this type of scenario, they're actually expected to move in the same direction. Okay. So that's for one. So I love what DXY is doing. It was also a daily SIBI. This is the same daily SIBI we were watching. I put in the free community. I put in my mentorship community. We wanted to see what price did here. You see that price rejected it. It's also an OB right there. Price rejected this. Stayed on the lower half. We specifically wanted to watch if price would reject the lower half. Y'all see what's up. Price obviously rejected the lower half. And then yeah, we've been trading down. So we're gonna see what's up. We're gonna see if it continues. I want this daily candle to end up being a red candle today, so that we can make a daily bearish fair value gap. I would love to see that. If we can see a daily bearish fair value gap right here, that would be lovely. So whatever DXY does to the upside today, I'm hoping that it's short-lived, so that we can trade right back down and make a daily bearish fair value gap. All right, so keep your eyes on that. Target was hit, by the way. We had targeted this low. If we rejected this was a target. That target got hit, and that was the bottom of the week. So we'll see what comes next. Now, something else we've been watching is the 2-year. And if you want to kind of like, if you don't believe me when I say that this market is rigged, like this is the proof for you. Yeah, every week we've been coming out here and sniping the heck out of the 2-year. And the 2-year bond is so news related that you would think that, well, you can't predict that. Like it's the bond market. It's based on a bunch of stuff that is unpredictable. You sure? How we predicting it every week? You sure? Price is gonna do it. Price is gonna do it. It doesn't matter what news is coming out. Like literally, since price is down here, I'm on record saying that my next draw is for price to come up here. We almost there. I really feel like we're gonna get there. I don't want to speak too soon, but like, bruh, I've been looking for price to come here, and that's why I love the monthly time frame, because the monthly told me, based on what price did with this green candle, based on what price did with that green candle, I already know the next place price should be going is up into here. These wicks up here on the monthly. And so if you know where we're supposed to go based on the monthly, every time frame under that is going to be submissive to the monthly. The monthly told us up here. So therefore, why do you guys think every single retracement I was able to call out where I think we're going to bounce at? Because if I know that the monthly is bullish, that means that every daily bullish PD array, such as a daily bullish fair value gap, a daily bullish order block, a daily bullish et cetera, et cetera. All these other PD rates I could speak on. All of those things have relevance because I know where price is going. I'm not looking at anything bearish. So anybody who is teaching you to look at, like this and calling this a bearish order block, or this one up here, or there's a daily bearish freaking fair value gap right here. Like, bro, just stop. Like, just stop. Stop looking at stuff here. When you have direction, you'll know to focus on the stuff on the current price like that you're on. So that's why it literally started from down here. We targeted the lowest body here, hit it to the tick. We looked at if price wanted to use this discount BTSY, used it. We looked at this BTSY in the middle. This BTSY was going to tell us everything we needed to know as we're trying to break this range. Boom. Then we looked at this. You wanted price to use the halfway market at to the exact tick, use the halfway mark, pushed up. We wanted to see if price will use this, because if we're bullish, price will use this. It's really that simple. If we're bullish, price will use this fair value gap. That's it. If we weren't bullish, price was going to take a big dive to the downside. Everything depended on this fair value gap. And do you see why I say that? Like, do you see why I say that? Like, this was such a big focus for us because it was going to tell us everything we needed to know. Do y'all see why I say that? Like, come on now. And so here we are. This was a conservative target I had. Conservative target. Obviously, we blew right past it, and then this was the ultimate target I wanted to see. So we're really close to it. I feel like we'll get there. And for the 2-year, it's going up because it moves inversely to interest rates. So if the price of the 2-year is going up, that means that's because there's the expectation that the interest rate is going to be going down. Interest rate go down, the price of the bond is going up. Okay, they move inverse. So as we know, Powell's expected to cut rates, and so that's why the price of the bond itself is skyrocketing like this. But once again, we've been talking about that since way back here. So that's that. And so we'll keep an eye on these things. I just like the fact that the dollar and the 2-year are both on the move. The fact that they're on the move tells me that, like, all right, cool, markets are ready to do something magnificent. So let's go Forex real quick. Then we'll go crypto, and then we go straight back into like stocks, futures. All right, so I'm going to briefly speak on Forex. I think Forex has some decent moves that could be coming. We wanted to see what price did with this weekly BTSY here on Euro. You see that price had tapped into this BTSY, and it's going to be pushing. It's been pushed to the upside. We talked about this. What's the lesson we can take from here? When price is staggering into a valid PD array or valid POI that you have, you love to see that, because that means it's engineering liquidity into something that's supposed to send us super bullish, where we're going to run that very same liquidity that we engineered. Like, this is not what true sell-offs look like. Like, notice that there's no bearish fair value gaps in this whole thing. And all it took was one candle to kill all of those stop losses, like Will just said in the chat. All of them gone in one candle. Feel what I'm saying? You let us see that. And so I'm also hoping that today's candle can flip over and turn green, because then we'll be able to make this. We'll be able to draw this and say, hey, look, there's a bullish fair value gap on the daily that just formed after touching a weekly bullish fair value gap. Feel what I'm saying? All right, so we'll see what today's candle ends up being. But you got this target up here. I'm looking for price to take these highs, especially after tapping into this. We're trying to leave this range. I would love to leave this range right now. We've been ranging here for quite some time, so it'll be lavish if we could actually just get up out of there and clear these highs. So I'm looking for the euro to continue higher, especially because I'm bearish on the dollar, so I would expect them to be moving opposite. So that's euro. British pound price had, we targeted this monthly RB. We got a reaction from it, but you see this reaction, look at it. You don't see no bearish fair value gaps. There's a small one up here, but outside of this small one up here, it's been staggered. And then we're coming into a discount BTSY on the weekly, right? So this BTSY could send us to the upside. So I wouldn't be surprised to see somewhat of a small down move to balance out this red wick a little bit. Like, it literally could come into this red wick just a little bit and then find its way back to the upside. I'm looking for more upside on British pound coming out of that BTSY. It's a weekly POI, so you could check the 4-hour out and use that as confirmation. So I like how the 4-hour after touching the BTSY just made a 4-hour BTSY. We love that, right? So I would draw that and I would see what price wants to do with it. Does it tap into it? Based on how this formed, I wouldn't be surprised to see it tap into it. I can see it using it, but we need to actually not just come to it. We want to actually push up out of it. If you see that, then I would target higher prices. Because if we actually use it and push higher, that's prices talking to you, is literally telling you secrets like, hey, this is a great POI you had chosen. Hey, it's a good one. All right, so that's British pound. So we'll be watching this 4 hour Bessie right there. Let's go to CAD. I think CAD, I just wanted to show y'all something, right? What was it? I just wanted to show you guys something. Yeah. So this was a valid bullish order block. We've been talking about this on CAD for weeks now. Like we've been talking about this on CAD for weeks now, guys. Like this bullish OB, and this is called time distortion, where price basically just consolidates on a valid PD array for an extended period of time, more than you expect. Like it just consolidated for so long. And I said, like, I'm still bullish on CAD as long as we're holding this OB. Like, and you see, we finally really like took off from it, and now we're, we got this target here, just trying to see if we can run these highs. But I'm still a little suspect on this little rally based on the fact that the nature of it is a little wicky. I wouldn't be surprised to see like, something like that, like hard, like come back into the range. I wouldn't be surprised to see something like that. So, we'll be watching CAD, but I think it was just interesting to just simply look at. I wouldn't trade this one. I feel like there's better tickets to trade. But just to see that like price really held this OB. Look how price came right to the 50% of it and all of that. Like price held that OB exactly how we wanted to, and then it pushed out of it. USD, this is another one. CHF. I think I really like this ticker if I'm not mistaken. Yeah, we rejected the RB. I really think we're gonna come and run out this sell side liquidity. You see these equal lows, these relatively equal lows. I think price is targeting that here on a weekly time frame, and so I want to see. I really believe in that target even more. If this week we could make a bearish fair value gap on a weekly, like if we could do that, that would be really lavish, and then it could be a pretty aggressive move to the downside to run out that sell side. Daily is definitely showing signs that it may want to do that. I love what the daily is doing. So on the daily, you're gonna want to see that. You're going to see price respect this big candle right here. You don't want it coming up too high. If it starts coming back into the upper side of this range, then it's probably not looking too good. So as long as price could pretty much stay heavy, then I would target the yellow line down there on USD CHF. And then I think the last one for Forex was USD JPY. It had ran our target. We were looking for price to run buy side. It ran that. We come down really hard after that. And what lesson can you take from that? Look at the nature of the move into that buy side target. It was a whole lot of engineering liquidity. And then once we run it, boom, come back down hard. That's something to look for always. Always be suspect of moves that look super choppy and super ugly like that. Look at the weekly chart. It's self-explanatory. All right, and then we had a hard reversal like that. And I'm targeting these lows on the weekly chart. These lows is the next place I want to see it. Same thing I said for the last ticker. I would love to make a weekly bearish for value gap right here. This would be lavish if we can make that. So once again, anything to the upside, I'm hoping it's short-lived so we can trade right back down and approach that yellow line on USD JPY. So that's that. Now let's do Bitcoin. Let's do Bitcoin. Oh man, let's talk about crypto people for a second. Crypto, y'all. What can I say about crypto, man? You gotta let us think. Okay, so this weekly BTSMC, as we said, will tell you everything you need to know about Bitcoin. We've been talking about this BTSMC since way back then when it formed. Like back when it formed many moons ago, I was like, oh, this is the most important spot for Bitcoin. We actually came into it that time period. This is back here in April, actually. We came back into it, hopped out of it. Beautiful. I had went long. Well, okay, let me explain Bitcoin for a second. Just my history with it. I had like publicly talked about going long on Bitcoin during this green wick, all the way down here during this green wick. We caught this whole rally, and then as price started consolidating, I sold Bitcoin at 71K. I sold it at 71K. Price came back down here, and then I seen that we were using the BTSMC. I got back in, and then I've been in Bitcoin, and then once price started to turn back around, I was like, oh, okay, never mind. I don't like what I'm seeing. We had this major sell-off. I took profits on my like second entry. I was cool. I was like, all right, I'm gonna just chill. Now, when price did what it did on this green move, like coming back into this very same BTSMC and pushing out how it was, I went long on Bitcoin again. Like, hey, I guess we were just sweeping these lows, and then we're gonna run all-time highs and then go for these all-time high targets I have at 95K as well as 122K. Because if we use this BTSMC, that's where it's going next. If we don't use this BTSMC, forget about it. so so basically, one thing I did say is this is a picture you guys have in the free community. I said, if daily bodies don't hold this BTSMC on Bitcoin, bodies, right? Daily bodies. I put that specific. I ain't changed nothing on this. Y'all have the screenshot of this. That's not a good sign for Bitcoin bulls. It's all about daily bodies holding this BTSMC. So price ended up coming down. You've seen a crazy wick come out, but bodies held it. I was on vacation when this happened, so I didn't really get a chance to update y'all, but I wanted to show you guys, like, see what I mean by bodies, see how bodies will hold the area. It generated a new high. What is the high of that move? The highest body on the weekly chart. That's a target in itself. I keep telling y'all about the highest body being a target, but it didn't hold, man. It hit that target, came right back down. Now bodies invalidated this BTSMC. I could officially erase this. It's invalid now. Once body closed under it, and ever since then, bro, Bitcoin's been looking very bad. And I do expect more downside on Bitcoin. Oh, and by the way, I had sold out of my Bitcoin. I got out of Bitcoin at 61K just now. Recently. Now, I'm not recommending that. I'm not telling you to follow me. I could be wrong. I'm very cool with Bitcoin rallying after this. If it happens, it happens. I'll get back in on Bitcoin. This is for my swing trade, not necessarily long term, but like most of my swing trading on crypto. I will get back long on Bitcoin if it could clear this consolidation. But to me, I really do feel like, especially with influence from potential NASDAQ downside, etc., as they tend to move in tandem, I do feel like this is the time when the BTSMC might finally fail. But it's been strong. It's been strong, but this BTSMC not looking too good. And if it fails, Bitcoin has a chance to come to the low 30s. It has a chance to come to the low 30s. I will let y'all know my official targets depending on if we lose this BTSMC, as well as how we lose the BTSMC. Because if we lose it and it's like really nasty, then I'll let you know what I think at the time. But for right now, it's very suspect, especially if we end up making a weekly bearish fair value gap, meaning the week that's about to open up in 33 minutes. Like the next weekly candle opens up in 33 minutes. If it could pretty much like just be, if it could just open up and pretty much be heavy to the downside, then yeah, you know what's up. It's not looking too hot on Bitcoin. So let me say one more thing on crypto, and then we're gonna move on to like futures and stocks. So notice that Bitcoin had ran all-time highs here, and I told y'all to look at divergences. Okay, so notice that Bitcoin ran all-time highs, but Ethereum did not run all-time highs. Ethereum has been rejecting its RB, and then it has a weekly BTSMC that's extremely important as well. This is an extremely important BTSMC for Ethereum as well. And so if Ethereum also loses this BTSMC, then it really could see some downside. But this is a divergence, how Ethereum did not run all-time highs, but Bitcoin did. And to be honest, if you look across all these other like crypto tickers, whether it's Dogecoin or Solana should be losing 119 soon, by the way. XRP, nothing really broke out. Bitcoin was the only one. ADA, these things just do not look good. ADA is almost at all-time lows. Like that's not it, bro. Like, so it's not looking too hot. And so, I will be that divergence in itself is something to eye. And not looking too hot, man. That's all I'll say. And so if NASDAQ is going with it, that's confluence for you. So when you swing crypto versus long-term invest in it, there's a percentage of your crypto portfolio or crypto asset you're risking on each crypto swing trade. Well, I'm talking about like just like a swing trade account. Like I just have I have long-term cryptos. I'll keep that in the ledger. But then what I'm describing right now is just crypto trading. I do like just little swing trades, but really to the upside on crypto. So if it's coming to the downside, that's why I just sold out at 61K. I'm like, I'm not about to experience no drawdown because I think that there's a potential it could really drop off. And that's what I'm saying right there. Now, disclaimer, I mentioned a weekly BTSMC. Understand that it's overlapping a monthly BTSMC. So maybe under that, there's still a chance, but I'm not gonna lie, it's not looking too hot because in general, you would want price to hold the upper half of this monthly BTSMC anyways, not the lower half, the upper half of it in this scenario. And so losing the weekly BTSMC automatically puts us to the lower half of this monthly BTSMC anyways. It's just not a good sign. And so, yeah, overall, not looking too hot. So crypto, nope. Now let's move on. Let's move on. All right, so I'm gonna go straight to the NAS. Straight to the nasty NAS. Now we talked about um the weekly not using that OB. We talked we talked about this busy under it, that it's already on the downside of it. And so what I was looking at before I made my watch list, everything I'm talking about, I did that mostly on Friday, a little bit on Saturday. So obviously I didn't see this gap down until right before class started. But I was looking to see if any retracement we got would happen early in the week, and maybe we could reject this SIBI. It's the nearest SIBI that we have. So if price is really aggressive, price tends to reject the nearest PD arrays when it's really aggressive. So clearly we've been really aggressive to the downside. And so therefore in this type of scenario, I'm looking for price to reject the nearest PD arrays, such as the nearest fair value gap here on the 4 hour will be a nice little spot, especially because when you look at the weekly time frame, guys, this will be the perfect time for the weekly to make a bearish fair value gap. The weekly has a bearish fair value gap up here that did not get traded back to. We love that. We absolutely love that. But I would love to make another one to the downside. And so if we're gonna make a red weekly candle, which is what I'm anticipating a red weekly candle this week. If we're gonna do that, I would expect early in the week to be somewhat green, which I still think could happen and will happen. I'm not gonna say will. I wouldn't be surprised to see it happen because right now, so far, if y'all peep, we opened up, gap down, and then we just dropped. We never made an uptick so far today in the first hour and a half of trading. And so I wouldn't be surprised to see, like, on the daily candle, whether, like, I could see us coming back above this, and I think it'll get shorted, right? I do believe it's gonna get shorted, but I don't feel like we topped out this week. You feel what I'm saying? And so in order to make a red weekly candle, typically you're going to see bullishness early on in the week, Monday into Tuesday, maybe a midday reversal on Tuesday, things of that nature, if you're expecting a red weekly candle. And so that's why I'm looking for like a little bit of bullishness early on in the week before a major drop back to the downside. That way we could have a red weekly candle. And what you'll notice by the end of the week is that you'll have a top wick here. That top wick was formed on Monday/Tuesday potentially. And then, Wednesday, Thursday, Friday gets, pretty aggressive to the downside. Friday is usually like some consolidation or maybe a small retracement. And so, but yeah, so exactly correct. Everybody in the chat, correct. So we'll keep our eye on that. Obviously, we just gap down. I'm bearish anyways, but it's like entry purposes. I kind of would like to see a little more upside to kind of take it back to the downside. But once again, you could watch this. We still drop it as I'm speaking. Goodness gracious. All right, so like I said, I already told y'all I don't think this fair value gap is gonna work. You can watch it, but I never really felt like this will work. I just marked it almost like as a conservative thing. But once again, I feel like NASDAQ next destination is to run these lows. That is what I think is gonna happen on NASDAQ, and so that's my expectation on NASDAQ. When I look at ES had this bearish OB as well. I'm not full bullish. It had a bullish OB, and it's invalidating it. It's invalidating it so far. We'll see. There's obviously still room in it, but I just have low hopes in it. I don't think it's gonna work. I think they're also going to be targeting these lows, which is a pretty big deal for the market. And another thing that gives me confluence for NASDAQ and ES to have more downside is the fact that the downside on the Dow Jones looks so much clearer. Like technically, NASDAQ is in a weekly bullish fair value gap in discount. Remember what discount is, the lower 50% of a range. Let me show you, because I know not everybody in here, we got different experience levels in here, but like, let's say I were to draw the Fibonacci tool from the low to this high, the lower 50% of that range is like, you want to look at PD arrays you have in there. And so, there's a fair value gap here, but I told you guys in context, I don't think this fair value gap is relevant. Technically, it should be because it's in discount, but I'm saying I don't think it's relevant. But you never know, right? You never know. So therefore, you can still look for confirmation in these fair value gaps down here. And then ES, once again, technically is still in its order block. So I'm like, all right, I know that that's the bull case. That is the only bull case I can think of. So I needed kind of like another ticker that can tell me like, all right, what can keep me bearish for sure? And when I look at the Dow Jones, is that because the Dow Jones to me has no bull case. I may eat these words, and guess what? Guess what I'm doing my strategy? I'm still not going to change it because this is proven to be right. in front of everybody for so long, as well as to myself. So I trade based on probabilities. I've seen these things so often on so many time frames that I'll put my money on it 50 times out of 50, and I'm gonna be right 46 out of 50 or something, right? Like I'm cool with the 4 times I'll be wrong on certain setups. And so when I look at the Dow Jones, to me, it's like we're coming to these lows, we're coming to these lows right here. And so if the Dow is going to be bearish like that, I don't see just the Nasdaq and the S&P just rallying for no reason. So when I look at those three, it tells me like, yeah, Nasdaq is soon going to confirm downside. ES is soon going to confirm downside for us, and it's looking good down there now. Here, let's go to the Russell. And once again, when I'm calling out these targets up here, this ain't no liquidity target. When I caught that, this is a target based on a whole different concept. It's an algorithmic target that I had put out on the Russell back when it was down here. And I told y'all that week, I said, yo, my target on the Russell is to come to this. And maybe you guys can see now why I say it's not random spots in the air, bro. It's a real logic behind why we choose it. It's algorithmically driven. Do you see what we said? We said two things in the past few weeks. We said we're looking for price to come to this yellow line. Notice that price came there, consolidated. We said a very important area for the Russell will be this fair value gap. I specifically picked this fair value gap, not the one below it, not above, not this one. Price came into it, it bounced. It actually made a new high. So it did what it had to do. But this legit was the top though. Like the Russell had no more juice, and now it's coming down hard. So this was the perfect target to exit upside on the Russell on. And here we are. We just made 2 daily bearish fair values in a row. Well, the second one is currently forming. I could see some more downside. What did I do? On Friday, I had drawn this. It looks like we're not even coming there so far. Like the Russell has been ultra bearish, man. Like ultra bearish. It's been probably more bearish than everybody else. Like this has been such a aggressive drop, and it looks like it's not even slowing down. Notice that I drew this out. This is liquidity. So whenever we're ready to take this section of the price lag, it's going to be an aggressive sell. Now, do I think it's going to happen like this? No, I think it's going to end up happening like this. All right, so I wouldn't be surprised to see something like that. All right, so keep your eyes on that, but I do have it coming down for sure. And hey, if it just goes straight line, then it goes straight line, whatever. But I do think it'll get a little bounce before coming back down. But ultimately, I'll be targeting price running that. If it runs that, then it should be coming to this red wick down here. I will eye this red wick on the weekly chart for the Russell. Now let's move on. Let's move on here to copper. Copper continues to show potential for more downside. We've been bearish on copper for quite some time. And I'm looking for copper to come down here to this sell side. As crazy as that sounds, I think it has much more room to drop. The monthly makes it pretty clear for me. I feel that if copper was bullish, it would have reacted on the monthly chart to this bullish fair value gap here, specifically the upper half of it. So even seeing it down this low tells me like where it's going next. So if the monthly is telling me it's coming here next, any rally you see on a lower time frame, on the daily, the 4 hour, I wouldn't really trust in those type of rallies. All right, so that's my next draw on copper. CL, man. CL, what we got on CL? Okay, so CL's been rangy for the most part, right? But it did reject this SIBI initially we had looked at, and then I don't think it didn't quite get there again. And then we've been just pretty much bearish. You got to pay attention to what's being rejected. Notice that we came into this bearish fair value gap, rejected it, made another one, and then that's what I drew on Friday. And so far today, it looks like we're rejecting it thus far. Specifically, what I was going to tell you guys in class is I want to see it reject the lower half of this. So I like what I'm seeing so far. We came into a 4 hour SIBI. So what are we confirming with? We confirmed with the 15. So far, we came into it right, but we haven't made a 15-minute SIBI just yet. So I wouldn't necessarily like trust the move until I start seeing 15-minute SIBI starting to form. And then I would trust that we're going to get to the 4 hour lows. All right. Carmen said CL was her boo last week. Good. Make it your boo this week too. It's looking heck, it has a potential move in it. So we're gonna keep an eye on that. We got gold here. What we had on gold again? I gotta remember low key. I went over like 200 tickets, bro, in this weekend. I'm not showing y'all 200 tickets. Don't worry. Don't go to sleep on me. But I went over like 20. So what are we saying gold again, bro? Daily highest body. We have rejected a daily highest body. We consolidating. Um, what did I see on gold? Daily busy and VI. I think I have more upside on gold potentially coming. Daily busy and VI. Let me check one thing real quick. Yeah, I think I have more upside on gold coming. Yeah, if gold was bearish, it would have kept this move down here. So you see this green wick that rejected this SIBI, and then we came under like that. The following green candle is very important because you really want to see. Let me do this so I'm clear. My fault, y'all. Let me make this clear for y'all. Like, all right. So there's a bearish value up right here, right? Price comes into it. After you reject one, you want to see price make another one. Okay, so cool. We rejected. Big red candle. Beautiful. We love that. Therefore, the next candle, you really want to see it open up, maybe go higher for a second, and then trade down. That way, on the watch list, we can say, hey, yo, gold made a bearish fair value gap after touching an initial bearish fair value gap. But then what do you see happen? The next day, gold pretty much destroys that trade idea. That's not a good sign. That's not a good sign. And then next thing you know, after that, it not only does that, but it now invalidates this initial bearish fair value gap. So that in itself is just bad work. And then simultaneously, while you're invalidating a bearish one, you're simultaneously making a bullish one, which is right there. And price opened up, came into it, and then today, I guess what did it gap up or something? I guess, I don't know. But either way, like we're using it so far, and we'll see what happens. But it's hard for me to be bearish on this ticker based on what I just described. But as far as trade setup, I don't think it's the cleanest. I don't think gold is the cleanest right now. So I mean, even if you zoom out, I don't want to trade gold. But I know a lot of people trade gold, so I have to speak on it. But I don't really want to trade it. I feel like there's better moves out there. SPY real quick. So SPY, yeah, Lady Cuz agrees. Lady Cuz, one of my OG snipers. Shout out you. So good. We got Lady Cuz Confluence. Now, as far as this on SPY, guys, same thing. SPY has its weekly bullish OB. That's what we got to last week. That's something that we talked about on previous watch lists. Price coming into here is a very important area, but with the confluence from ES and NQ, etc., I once again feel that we're gonna end up trading under this. But yes, this is the bull case. So as much as I could talk all these bearish cases, and even from the news or whatever it is, we can't forget the fact that we're still in a weekly bullish OB. And we have clearly been in a super bullish trend. So understand that everything we spoke on today as a disclaimer is all early signals of something that could potentially happen. It has not confirmed yet. We're still here. We can still use that and come to this monthly target that we had to the upside at 611. All this stuff is still possible. It's just showing signs that it might not want to do that. It might be ready to turn over, but we will see. If it loses this area, then I will target these lows once again. And QQQ, they had their bullish OB. I think, what do we do? Okay, we technically still in it, but you know, same sentiment as NASDAQ. If this doesn't work, I'm looking at those lows. Let's move on. I'm sure IWM been crazy. I don't think I had IWM, I would target these lows same way and all of that. Now let's go to like some stock tickers that had some decent setups. I'm gonna see how fast I can breeze through this. See, I gotta bear with me real quick because I have a bunch of tickers that have some setups. NVIDIA is part of I got NVIDIA for you. That's part of the ones I want to show you. And I'm gonna try to breeze through this so I don't keep it out too long because I'm not gonna front. There was so many setups that I was like, dang, like I can't show them all of these. So I really tried to narrow it down. But Apple, one thing I want to say on Apple is just showing you once again. If you guys remember, Apple was down here, and I said Apple, my next place that I think Apple's going is 235. That was at all-time highs. Apple never traded that high. When price was down here, I said it's going to 235. Do you guys see what I mean by this market is algorithmically coded? How can I know where Apple was going to stop at from way back there? And this is not about me, or I'm not bragging on me. I'm trying to show you the stuff that, first of all, I teach. So obviously I share this information, but two, it's like, yo, this market, I don't believe the smoke and mirrors that they try to convince you. Like, I'm telling you, bro, there's so much more that you may not know about. Like, this stuff is all predictable. That was literally the top of Apple right there, the target I had called out from way back here at all-time highs. And then so we'll see what happens, how much more downside it wants to go. If if Nasdaq has potentially more downside, then you could assume Apple would as well. But ultimately, the trade itself, I'm not really a fan of the way it's dropping and stuff. So I'm not interested in that. But I just wanted to show you guys that for the all-time high target. Now here on Airbnb, this is a setup that it looks pretty solid. I think on this weekly time frame, I like Airbnb making its way down here to 113, running out these lows eventually. On the weekly, I want to see a weekly bearish or value gap. There's a daily gap here that I want to see if we retrace first. I want to see price reject this gap. If we retrace first, I want to see price reject this gap and use it to run out this yellow line and even further below to get to our eventually get to that target. That yellow line is the lows of this consolidation. All right, so if we retrace first, I want to see us reject this gap to go down there. I don't really want to see price come up into this red candle. If it does, it gotta reject it really sensitively. I don't want to see price. If price ever sees its way above this red candle, I know it's done for. I'm not bearish no more. I'm still bearish in here, but ideally the gap is when I want to see it rejected. Now, if we just gap down tomorrow and we open up all the way down here on Airbnb, I mean, what can I say? Like the play already happened because we really wanted to come down to 113, but we would have to find a new entry. But either way, bearish on Airbnb, at least directionally. Adobe, what do we have? Adobe, what do I like about Adobe, bro? I think I just wanted Adobe to come to this BTSMC. I think the next destination for Adobe is that BTSMC. And we'll watch what it does there. Just that's like a short-term trade, but like it's like almost clear to me. I don't like to jinx things, but it's almost clear to me that it's coming at least to this BTSMC. So even just shorting it to that BTSMC is a play in itself. I mean, this BTSMC starts at like 505. That's $20 away. So $21 away. So we'll see. But not really like one of my favorites. Now, Amazon. Come on now. We talked about this on the watch list, bro, before earnings. And I put out the screenshot of me saying in earnings day that it's gonna drop down on earnings. I'm bearish on it. These were the two targets we had. It came to 165 was the target we had, and you guys can see I had targeted that weekly BTSMC. That's why I said 165. And how is the way that I can know that, by the way, for lesson wise? What do we say about moves that look like this, people? Right? Everything I needed to know about Amazon was about what it did with this fair value gap right here. This told me everything. If we did not use this, automatically, bruh, it's going down here. And that's the analysis. There's nothing special to it. I just need you guys to look at moves like this and be suspect. And then this is the thing that will tell us everything we need to know. Once price invalidated it, boom. Once we had a watch list that day, I was like, yo, Amazon 165 is over with. You see why first target was right here? First target was here because it was a swing low, conservative. But I knew he was really going here for it. That's why I said second target. Understand? And so that's easy. Now, when did they make the move? When the news happened on earnings. It consolidated for a while, but it ended up gapping down on earnings. And look where it bounced at. It filled out the fair value gap perfectly and bounced. Oh man, I thought the market was driven by like buyers and sellers and all that other stuff they try to teach you. Come on, man. I'm trying to tell y'all. This whole market, man, don't even get me started. So, that's Amazon now. If Amazon to turn back around and lose these lows, like if it loses the lows of this BTSMC, then I think Amazon's going to find its way to this monthly BTSMC under that. All right. So this monthly BTSMC, I think Amazon can see its way down here like 142. Okay. Because if it don't use this BTSMC on the weekly giant, it should be coming to that monthly one at 142. ATI, I don't even know what this ticker does, but I had like what I seen as a setup. And I think it has some real downside potential. Like if we lose this red candle, basically like if we lose $60, in other words, then I think it should be able to come down to the swing lows down here on ATI. But I don't know what the contracts look like, but I could just kind of tell that move got a lot of work to it. Now I told you about Bath and Body Works a while ago. Bath and Body Works right here. Bath and Body Works, man. Oh my gosh, this move, I'm sick because I actually was shorting this move up here, but I've been took profits, and then now I see like it kept going, and I knew it would keep going too, but I was being a little, I can't even say that word in here, so y'all know what I'm saying, but whatever. It's dropping off. I think it's gonna end up running out these lows. Personally, I would talk these lows. It already invalidated both of these fair value gaps. These fair value gaps were like important. Um, that's why I had it drawn initially, but really I was looking at the first one up here. This one, once this got invalidated, I could already tell like, all right, it's coming down lower. So yeah, I think Bath and Body Works has a move to the downside there. And we've all been there. Yeah, thank you. I need that because I'm like, yo, why'd I get out this play? Because this is pretty clear. The monthly kind of could show you too. If you see the monthly, this is a bullish fair value gap on the monthly. You see that we tried to bounce at first with this wick, the July wick, but look at what August has done. Took all that right back. We about to run these lows. If we run these lows, it just gets clear to me we're going to take these monthly lows right here. And if we take these monthly lows, why not just go right under and take these? So that's why I feel Bath and Body Works has a pretty nice move here. The monthly is pretty clear to me on Bath and Body Works. Now, nah, not Boyle. I don't gotta show y'all Boyle. Boyle's the same thing I said before. I still think Boyle is coming down. I told y'all this back when Boyle was up here. I still think it's coming down to 658. Those would be all-time lows. It's never been that low. So that's a low target I have for it. It's at 658. I think it's going there still, but we'll see. I'm not trading that though. Yo, airlines, y'all. Airlines, man. Them airlines do not look too hot, y'all. It's not looking too hot. Delta rejecting the monthly SIBI after a run on buy side, creating a fair value gap here that I don't think is going to get traded back to. So I think we're going to leave that open as we approach these lows. And I think Delta has a big drop. This is actually one of my favorite plays because I think that it's going to be a pretty massive drop. And then let's just talk fundamental for 1 second. When there's recessionary fears in the air, who out here buying vacation? I mean, I know some of y'all in here rich and all that, right? I don't want with a lot of the rest of America is probably not gonna be out here buying flights and traveling this, that, and the third. So when there's recessionary fears, airlines definitely be selling off. And so if there's recessionary fears in the air right now, that's what's been causing this turmoil in the market is recessionary fears. As we spoke about that at the beginning of the Zoom, then yeah, I mean, if you want some confluence, that'll be confluence for you. But I look at charts. Chart wise, it's telling me we're going much lower. I'm looking at running out all of these lows. I can see it coming down here to $26 and change, minimum. So we'll see. Disney, I think, is gonna finally run out these lows I've been waiting on. My gosh, I'm actually in Disney puts still. I'm in my swing puts on Disney still. I'm looking forward to run these double lines, both of them. So $78, $76, both. You can see these 3 lows right here is real pretty. We'll treat them. So, or we already and if you're looking at this bullish fair value gap and saying, well, we might bounce there, bro. It's already been mitigated. Price already tapped into it and made a much higher high actually. So, in context, after coming down with bearish fair value gaps, I will be extremely surprised if price ended up bouncing here. And what I mean bounce, I mean like reversing. I'm cool with this, but I'm not cool to reversal. I will be surprised if we reversed. So yeah, I think we're gonna trade past this and approach sell side. Price's objective is to run out sell side liquidity right now, in my opinion. So Disney looks real good for some swings down there. But I would say wait for a clean entry. Don't FOMO into things. Wait for a clean entry. You would have to get it up higher. Like I got it higher on that move. Now GM rejecting the monthly SIBI. I love exactly where this monthly SIBI is exactly where I wanted to reject. Mentees. We just talked about this concept, mentees. Y'all don't need to say it in the chat, but y'all may know mentees why I will be looking at this. And so hopefully you guys can see it. This is exactly what we talking about on Thursday, y'all. Wink, wink. Okay, so maybe you guys can see now why, like I was saying, this play has potential to move to the downside from here. Especially if we could continue like having a expansion candle here. That's the monthly chart. On the weekly, this is what it looks like. We just made a weekly bearish fair value gap. I love that. I absolutely love that on the weekly. Why do I love that? Whenever price has a bullish fair value gap like that, and you invalidate it with a bearish fair value gap, like so, right, Jessa? Yeah, we love that. We love beautiful, great bearish sentiment. And look at the expansion that existed last week. We want to see price get even more aggressive to the downside. And so, I'm not worried about this bullish fair value gap right here. I do think price is going to trade past it. And even though I think it could honestly go lower than this, I think a safe target on GM is like 37 and change. This monthly busy, just a safe target. I think that's a decent spot to take it. So that's a lot of, it's a lot of room down there on GM. Now Google, once again, another target we had called to the upside at all-time highs was the 186. Notice that that's where price pretty much topped out at. Went above it a little bit, consolidated, and it ultimately came down. So I keep telling y'all, them all-time high targets was major. This basically we talked about on a different watch list. It ended up working out really well, but it's time to go down. And for Google, what did I see here again, bro? Hold on. This monthly fair value will tell us everything we need to know about Google. So I would look at this. I'm not saying to take a play on it. I would more so use it for research purposes and see, like, if we come into this monthly area and you start seeing weekly BTSMC forming, I would take Google all the way here to 220. If we got weekly BTSMC coming out of here, Google should be going to 220. If we invalidate this, Google is going to make a pretty nice drop. I would honestly take Google to like at least 115, at least, if this doesn't work. So there's a lot of room to the downside, and there's also a lot of room to the upside. I would just let price decide for us what it wants to do, but at least it should at least come here though. This monthly BTSMC, it should at least get there. What it does after that, we'll find out. Robinhood, man, I do my swing trades on Robinhood, so this hurts to say, but it might be bye-bye Robinhood. Real life might be bye-bye, because I'm pretty sure we should be running out these lows next. And if we run out these lows, I don't think we're going to bounce on any of these BTSMCs. I think it'll actually be a move back to run out these lows. Notice that we had some major consolidation and then price popped out. So if price was still bullish, there's no reason for it to come this high and then come all the way to this consolidation just to go bullish, right? So if it makes its way to this consolidation, chances are it's actually going to run out all of the liquidity that we engineered on the downside. And so I'm looking for Robinhood really can make a pretty big nosedive. We're rejecting this weekly SIBI right here too. That's what we're currently rejecting on Robinhood. Notice that I rejected right around the 50% of that too. Yeah, so we'll see. It has a lot of momentum right now. On the weekly, you can see the daily looks pretty good too. These are some really clean lows that we could at least take. That's why I think initially we're gonna take this. But if we take it aggressively, then I would look for price to come into those other targets I have there. GS, I'll do GS real quick. It wasn't on my watch list. I typically take requests after, but because I'm really right next to it, I'll just show you. Clearly I charted something on here, so I said daily BTSMC. Why did I write daily BTSMC? I probably feel like I meant to write weekly BTSMC. Yeah, I think I meant to write weekly BTSMC. I'm gonna fix that right now because that's not a daily. But for here on Goldman Sachs, we had used this weekly BTSMC and we pushed out of it. Beautiful. Okay, that's good. If we're truly bullish, we would be using this weekly BTSMC right here. This was a very important one. So seeing that price looks like, I guess it didn't technically invalidate it just yet, but it's not looking too hot. I think it's going to continue to the downside. And then if it does continue to the downside, I would target the lows. I would target the lowest body here on the weekly. I would target, let's go 445. I'll go like 445 is probably the next place it'll go. The daily, I mean, look at the daily chart. We don't like these type of run-ups. Didn't we say that? Choppy, nasty. This is just old liquidity for real. So, and then look at the momentum on the other side of the move. The bearish side of the move looks like the true direction. And so, yeah, I'm looking for more downside on GS. I'll flag it real quick. I'll keep my eye on that. We talked about Robinhood. Intel, oh my gosh. Intel is the one I wanted to cry to y'all about. Can I just vent for 1 second and we get back to what we want to do? Bro. I don't know if y'all remember this watch list about Intel. I said this on the watch list many moons ago. This is the weekly chart. It's a weekly chart. You could see how many weeks ago I talked about this because they just consolidated after it hit the target. But I had given 2 targets on Intel on a previous watch list. I had given this target, it hit it, and then it consolidated, and I was like, all right. But I also gave this target on Intel. And oh my gosh, bro, like y'all seen what last week is? I mean, what was that, Friday? It was down 26%, bro. Like it always in the earnings is always in the chart, bro. Earnings is always in the chart. I just wish y'all knew that. Like it hit its target, it retraced because guess what? When does price retrace? Typically after it meets an objective. It met its initial objective, which is running out these triple bottoms, consolidated, made a retracement, rejected in this gap, and then it took a nosedive and then it just kept going. Now I know, yeah, they're gonna blame earnings. You know how that go. But we've been told, we've been said Intel was gonna run these lows. And look at it on the monthly chart. Isn't it pretty clear where price is going? If you were just staring at the monthly, and do you see why I start with the monthly? Because then at that point, I know every retracement is gonna be a fake out because the monthly already screamed at you where it's going. The monthly told y'all like 5 months ago that Intel is coming to $24. So why the heck would you believe in this rally that occurred in this red wick? Why would you even believe that? All that was a retracement into a monthly civvy where it rejected the 50% of the monthly civvy and continued in the direction that it was supposed to go. And now, so where does it go? Where to now? Where to now? I mean, you have a lot of resting liquidity. There's a chance that Intel could take out this whole area. There's a chance it could come all the way down here. Now, I would take it a step at a time. I would probably target this low at first, and then I'll probably see what it wants to do there. But like, the easiest target I had was the 24. I ain't gonna lie, that was the easiest target. After this, it's kind of like we'll see how much farther it wants to go. It's been a disgusting move. It's been a pretty disgusting move here on Intel, but that's why at least y'all could take from that. Just take the fact that start with the monthly time frame, man. The monthly will give you true direction because every time frame under that is submissive to it. If you want some airlines confluence, I told you about airlines. If you want airlines confluence, I like how price rejected the highest body right here, right in that VI. Was coming down monthly. Looks like it wants to approach these lows here, these double bottoms. That's liquidity. Monthly looks good. If the weekly could make a bearish fair value gap, I'm definitely taking it to 1470. So ideally, Jets. I want Jets's weekly candle this week to be a bearish fair value gap. That's more confluence for the Delta Airlines trade we had talked about earlier. All right. JPM. I think what was I saying? Yeah, this BTSMC would have told us everything we had to know about JPM, but being that body just closed under the BTSMC, I am now targeting the lows here on JPM at 190. All right. Yeah, Microsoft has some serious downside potential. We initially bounced on this weekly VI. We've been calling Microsoft out pretty accurately, actually, week after week. And after invalidating this BTSMC would have told us everything we needed to know. Microsoft, it was about this. Now that we invalidated it, swing low right here. If we keep accelerating under this swing low, the next draw will be this monthly BTSMC at 363. I'll show it to you. I like this monthly BTSMC here at 363 on Microsoft. All right. I didn't like Meta. Somebody requested Meta real quick. At least I could show you guys once again. This is another target I had called out when Meta was way back here. For people who've been with me for a while, you may remember we called out Meta's the higher Meta. It's never been that high, obviously. Called out the high, and look where it topped out at. At first it hit it to the tick and traded down. They hit it to the exact tick. That was fire. Price came back up. It's still rejecting it though, and then lo and behold, it still can't close above that. So this was indeed the high of Meta so far. That 531 that I was looking at, and we'll see. But like trade wise, I think it's gonna end up running these lows. I do feel like that. After rejecting this premium civvy, I do feel like we're gonna end up running those lows. But when I look across the market, I feel like there's so many cleaner moves that I wouldn't want to trade that one. Yeah, I'm gonna get to all your requests soon. Let me show you the ones I love though. These are tickets that I pretty much love the setups. Everything else, that's funny. I have so many tickets that anything y'all request, I probably have it on the watch list. Like FedEx, I charted that. I didn't love it. That's why I'm not showing it to y'all until after. Roku, I charted it. I didn't love it. That's why y'all not seeing it until after the recording, of course. But yeah, so I'm showing y'all the ones that I actually like a lot. So Micron here, Micron. If it's not for this BTSMC, I like $48, $48.69. And honestly, it's looking like it's gonna invalidate this BTSMC already, obviously. And so, yo, Micron has a nice drop. I like this ticker a lot. It has a nice potential drop coming in it. I like the low down there. Now these are some major targets I'm calling out here, right? Like these are a long way away. So these are bold like predictions here. So what I will do is keep my eye on the daily charts and the weekly charts to make sure that they're respecting bearish PD arrays, because en route of a bearish target, you will want to see bearish PD arrays getting respected. If you start seeing bearish PD arrays getting disrespected on the daily and above, then you could start to say, hey, maybe the downtrend is over. Maybe that's all price wanted to do. But I will be, we'll revisit this over the weeks. We'll see how low these things want to go. Now, this is a ticker we've been talking about, NUE. Another a BTSMC. Just think of it as a bullish fair value gap. I explained fair value gaps on my Instagram too. I made a couple of reels for that. After the Zoom, if you're not familiar with a fair value gap is, not after the Zoom, after the recording, then holla at me. I'll tell you. But just for recording purposes, let me finish this real quick, and I got you. So, dang, I just got an alert that said Coinbase is down 8% overnight right now. 8% is crazy. Coinbase is getting killed. Sheesh. Okay, so I never erased my arrows, guys. So this is an arrow I had drawn. We wanted to see price come to this weekly SIBI to take it lower on NUE, and price ended up doing just that. We talk about bodies. Weekly bodies are holding the area. Now look where the weekly bodies always close at, guys. Look how the weekly bodies close under 50%. That's exactly what you want to see. So boom, close under that joint, and now we just made a daily SIBI. So you came into a weekly SIBI, had a kind of funky reaction, but now we just made a daily SIBI. Beautiful. And we have these beautiful lows right here. Look at this. Chances are price will probably gap down under these tomorrow. I wouldn't be surprised. If it does not gap down under those, then you want to see price reject this VI right here. All right, body should reject this VI if it does not gap down, and then we could take that even further to 140. All right, that's what I'm looking for there. So cool. Now NVIDIA, man, everybody love NVIDIA, and Celsius said, which sectors is the market rotating into next? I'm seeing things that's basically talking about the market rotating into just anything that you typically see the market rotating into in recessions is what you're gonna see. So do research on that. Like you're gonna see like just anything defensive. You're gonna look at your things that won't fail in a recession. You feel what I'm saying? That's where we at. So like as far as big tech and things that are risk on type stocks, meaning it's okay to pretty much be in risky investments, those things is just not looking too hot. I don't know if y'all peeped, but the Mag 7, your Nvidias, Apples, all these things, they were doing well, but the rest of the market wasn't. And then the whole AI hype and the whole AI boom is starting to cool off. And Mag 7 and big tech has been getting sold off. A lot of people don't realize. I was at Nvidia. Perfect. I'm at Nvidia. Let's talk about AMD for a quick second. A lot of people don't really realize just how much AMD has dropped. Like it's kind of been dropping like secretly. It was at 228 and that thing is down here at 132. Like that's a major drop. People don't really realize like they've been selling off these things like little by little, and now it's priced on to get aggressive. And so, a lot of these big tech companies have been coming down. The momentum has been dying off, and so what was I about to say? Yeah, so I forgot what I was saying, guys, but whatever. Just yeah, the risk is coming off, and the market is rotating like that. And so for Nvidia, here's what I was thinking. We had targeted Nvidia back when price was up here. You have a screenshot in the chat of me saying the next place Nvidia should be going to is the lower half of this BTSMC, as that's a conservative place for me. So far, it came to exactly the 50% of it. I wanted to go to the lower half. Now, very technically, it went to the lower half, but that's not what I was looking for. I wanted it even lower than that. I'm not about to talk about that. I wanted it even lower. I do feel like Nvidia is gonna get rejection. It might even reject this weekly VI right here, or this weekly. So you could draw it up this high. I feel like Nvidia could reject anytime before like 111 for real. Oh, that's a daily. My bad. I'm on a daily chart, so it's a daily VI / daily SIBI. However you look at it, it could reject anywhere before 111. I would not be surprised to see that. And then keep moving to the downside. I think Nvidia has some more downside on it. And for me, everything on Nvidia depends on this weekly BTSMC. If we don't bounce on this weekly BTSMC, I think Nvidia could see its way to $75. All right, so everything about Nvidia depends on this weekly BTSMC for me. But I think it has some more downside. Like if it is gonna bounce on it, I still think it's gonna go lower first before going higher. So I know you guys may think that I'm always looking for a price to stay on the top half of a BTSMC. That is not true. I am not always looking for the top half of a BTSMC. It's all situational. A lot of times, yeah, but not all the time. This is one of the times when I want the lower half of the business. All right. Royal Caribbean is also one of my favorite plays. I've been watching this for a while. Like since Price was over here. It's actually on a previous watch list I've done. I think probably in February, because I think it was this. I like this Bissy. I remember this. I remember this watch list. Yeah, my OGs might remember this watch list. Royal Caribbean, we wanted Price to use this Bissy to take us above all-time highs. Look at these freaking 5 relatively equal highs. That's easily liquidity. So this Bissy was so obvious. Now we ran it, but I hated the move because it was so ugly. Like, what the heck is this? So I've been waiting for Price to just turn back around. Like, when are you going to take all of that engineered liquidity? And I feel like it's starting. And then what I notice about these cruise lines is when they move in a direction, they be moving, bro. Like they go, look at this, one directional. They go like one directional. They go one directional. They go one directional. So like, I feel like this could be the potential start of another big one directional move. And oh, Nats said if it is at $99 overnight, thank you for saying that. I wonder where they 99 overnight. Dang, hold on. That's down here. Okay, so okay, no, that's like, yeah, that's at the lower half of the Bissy. Bet. So they hopefully they'll open up in the lower half. And once again, if they don't use this Bissy, you know I got Nvidia going lower. So bet. Thank you for that. So yeah, Royal Caribbean though, I think this could make a pretty big move to the downside. I'm definitely eyeing that. The monthly, based on the monthly, I would just target. If I was looking at the monthly, I personally would target this monthly Bissy down here, starting at 106. That's a huge move, bro. From here to like 106 is a big move, and I really feel like it could do that. But you know, we'll see. Just pay attention to what's working. So I don't know. What's an example of that? Let's just say you're somebody that was looking at this bullish fair value gap. Did it work? No, it didn't work. But a bear, what is a bear looking at? A bear is looking at the bearish fair value gap. Did that work? Yes. What is true bearish sentiment that we talked about? When you use a bearish fair value gap and shortly after you create another one. Did we do that? Yes. We made another one right after it. That's bearish sentiment to me. And I don't think this is the bottom, right? There's nothing for Price to bounce on here. No, like just in context as well, it looks like it wants to kill this entire area. So I trust bearish PD arrays on this price leg. Any retracement into a bearish PD array on this price leg, I trust that it will most likely reject it until we at least come like down here to the area I said it would. So I'm looking at Royal Caribbean down there. Rivian, what did I say about Rivian? I don't even remember putting this on the thing. I feel like, no, I don't think this is supposed to be a ticker I'm talking about. Nah, I'm not looking at Rivian. Nah, I don't think that's a ticker I'm necessarily looking at. I mean, while I'm here, I would target this Bissy on the weekly though. It should at least come down that low, but that's not part of my watch list. Okay, so my bad. All right, we almost done. SMH is just confluence. I think if SMH was gonna bounce, it would have bounced on that Bissy. Now that it invalidated it, I'm looking to see if SMH can make a bearish value up on the weekly to take out these lows. All right, so I think SMH has some more downside, which is some Nvidia and AMD confluence. Snow. SMH is a semiconductor ETF, by the way. All right, so if the ETF is going down, then the tickers inside of it have more downside as well. Here on Snow, Snow, man, we caught Snow from the top, y'all, from the top week after week, and it continues. It continues to reject. Look what it rejected. Weekly SIBI. Mentees, do you hear me, mentees? Do y'all see what we on? I don't even gotta say it. Y'all don't gotta say it in the chat either. But do you see why it's very likely that we will reject in that exact spot? Hopefully I can see it. But yeah, then we ran those lows. And if we run those lows, I would not be surprised to see us run these lows. So I don't think Snow's down move is over. I think Snow will come and take 110 soon, which is all-time lows, I think. Yeah, that's all-time lows. I mean, after running out buy side, it's time to run out some sell side. So I want to be surprised to see Snow extend to the downside. So I think Snow has some real bearishness in it. Tesla, man. I don't think this is a watch list ticker. I feel like I have it highlighted because I like to look at Tesla, but I would say pay attention to how Tesla mentees. I don't know if y'all see it here too. It's right here as well. But anyways, Tesla's using this basically on the other side, and then it rejected it and made a SIBI. Not good for a bull, right? Not good for a bull. That is not good for a bull, especially if we don't come back to this SIBI. If this ends up being a SIBI that we don't revisit, that's really bearish for Tesla, and you could see a serious down move on Tesla coming if that is the case. All right. And man, Uber, I caught this play. I saw right here though. I ain't gonna lie, I'm kind of sick. I wish I held longer. I wanted to teach a lesson out of Uber for a second. So I was live trading with the mentees when this occurred, and we were watching Uber. We were watching Uber to see if it could go even higher. And I highlighted this area. I said, this is consolidation. There's two ways that this could occur. I said, guys, on the upside, we have this resting liquidity. And if Uber is bullish, we would want to see a pop out of this consolidation and make a BTSMC. Okay. And so when it popped out, it made a green candle. Okay. I told them, I said the next day, which had to be Wednesday the 17th, I said the next day needs to be a green candle. And if it is, oh, Uber's coming to $82. Like, it's gonna run out this whole area and go to 82. But it has to deliver that way. So when you're leaving consolidation, you want to leave with a fair value gap. So that's one thing to take from that. Now, when you don't leave with a fair value gap like that and it comes back into the range, I sent this to the chat. I said, unless Uber is consolidating, the only likely destination is sell side liquidity. So literally, once all this happened, now I hop on Uber. And what did I say? When you leave consolidation, you want to leave it with a fair value gap, right? Like, come on, like it's. Let me know if I ain't say that just now. Are you understand what I'm getting at? When you leave the consolidation, you want to leave it with a fair value gap. Look at this red area. This is a fair value gap. Okay, why do we want to leave it with a fair value gap? Because if we do come into that fair value gap, then we want to see price either not use it. That's my favorite. Or if it uses it, it needs to. Technically, we love to see it use it on the lower 50%, but as long as it's holding it, we're valid. Now, people who might not understand fair value, it's like, yo, but bro, it traded above it. Please remember, we need bodies to hold fair value gaps, not wicks, not wicks, not wicks, not wicks, bodies. Notice that the bodies obviously held the fair value gap, and then that's why this was such an easy put to the sell side liquidity down here. It was such an easy play because it's like, if not this, then this. If not that, then that. And that's how I love to trade. Keep trading simple. It's always an if then statement. All right. Oh, that was it. Perfect. That was actually the last one. Good, man. So those was all like the setups that said a lot, man. Those are all the setups I like across the market. There's a lot of freaking fundamentals spoken about today, economic, technical analysis, it was everything. And if it's your first time in here, definitely tap into the free community. As soon as I turn the recording off, I'm gonna put it in the chat. But if you're watching this on YouTube, the link is in the description for the free community. Okay, we really get it in, daily updates, all of that. It's a great community. It's not no egos in there. It's not people just trying to throw profits in there and just trying to brag about they the best trader ever. Like, I hate that stuff. That's not what my Discord is about. It's really about getting better. It's about learning and all of that. That's my heart as a retired math teacher. My heart is to teach, and that's what I'm here for. So you're in the right place. Link in the description. And that being said, that's what she wrote.